Hi everyone, and welcome back to my channel. Today, I'm going to be talking about mutual funds. What are they? What are the different types? What are the advantages and disadvantages? And how do you choose the right one for you? What is a mutual fund? A mutual fund is a type of investment that pools money from many investors and invests it in a variety of assets, such as stocks, bonds, and money market instruments. Mutual funds are professionally managed, which means that a team of experts is responsible for selecting the investments and managing the fund's portfolio. Mutual funds are a popular investment option in India. There are over 200 mutual fund companies in India, and they offer a wide variety of funds to choose from. Mutual funds in India are regulated by the Securities and Exchange Board of India, SEBI. Different types of mutual funds in India. There are many different types of mutual funds in India, each with its own investment objective. Some of the most common types of mutual funds in India include equity funds. These funds invest in stocks, which are shares of ownership in a company. Equity funds can be either growth funds, which invest in stocks that are expected to grow in value over time, or income funds, which invest in stocks that pay dividends. Debt funds. These funds invest in bonds, which are loans that are made to companies or governments. Debt funds can be either short-term funds, which invest in bonds that mature within 1 to 5 years, or long-term funds, which invest in bonds that mature in more than 5 years. Hybrid funds. These funds invest in a mix of stocks and bonds. Hybrid funds can be either balanced funds, which invest in a balanced mix of stocks and bonds, or target date funds, which invest in a mix of stocks and bonds that becomes more conservative as the investor gets closer to retirement. Liquid funds. These funds invest in short-term debt instruments, such as treasury bills and commercial paper. Liquid funds are considered to be low-risk investments. Some important factors to consider when choosing a mutual fund. AUM. AUM stands for Assets Under Management. It's a measure of the size of a mutual fund. Larger funds tend to have lower expense ratios and are more liquid. Cash holding. Cash holding is the amount of money that a mutual fund holds in cash. Funds with higher cash holdings are more likely to experience capital losses during periods of market volatility. Expense ratio. The expense ratio is a measure of the fees that a mutual fund charges. The lower the expense ratio, the lower the cost of investing in the fund. There are many advantages to investing in mutual funds. Some of the most common advantages include professional management. As mentioned earlier, mutual funds are professionally managed, which means that you don't have to worry about selecting the investments or managing the portfolio yourself. Diversification. Mutual funds offer diversification, which means that your money is invested in a variety of assets. This helps to reduce your risk, because if one asset class performs poorly, the others may still perform well. Liquidity. Mutual funds are liquid, which means that you can easily buy and sell shares. This is in contrast to some other investments, such as real estate, which can be difficult to sell quickly. Tax efficiency. Mutual funds can be tax efficient, which means that you may be able to defer or reduce your taxes. There are also some disadvantages to investing in mutual funds. Some of the most common disadvantages include expenses. Mutual funds have expenses, such as management fees and marketing fees. These expenses can reduce your returns. Redemption fees. Some mutual funds charge redemption fees, which are fees that you pay when you sell your shares. Risk. Mutual funds are subject to market risk, which means that the value of your investment can go up or down. When choosing a mutual fund, it's important to consider your investment goals, risk tolerance, and time horizon. You should also consider the fees, expenses, and cash holding of the fund. If you're not sure which mutual fund is right for you, you should talk to a financial advisor. A financial advisor can help you assess your needs and recommend a fund that's appropriate for you. Conclusion. Mutual funds can be a great way to invest your money. They offer diversification, professional management, liquidity, and tax efficiency. However, it's important to understand the risks and fees associated with mutual funds before you invest. I hope this video has been helpful. Do like, share, and subscribe. Thanks for watching. See you in the next one.